some people say, oh, the transactions are completely private. Well, they are until they're not, right? And the argument in general for CBDCs, again, I think is around visibility and control. And in the context of China, where the government has so much visibility and surveillance capability, it becomes, it can happen.
All right, man. Let's kick off.
Okay.
Well, Zennon, I'm very happy to have you finally on the show. And I apologize last time for actually cancelling on you. I was very sick at the time as well. So a couple of weeks later, we can sit down now and have a nice chat.
Yeah, it's, sickness is becoming a much more acceptable excuse these days, whether it's staff or friends or
it's hard to
podcasts even.
It's hard to get these meetings, though. I know like you're very busy, you're traveling a lot and stuff, so you'll finally sit down and get into a lot of details. And then there's a lot of stuff I want to get into because I think I've interviewed a lot of people in the fintech space. Some people could be more opportunistic, some people are more like pessimistic, but I think you're very realistic because it's weird, like your role, I suppose, as like a researcher is kind of like doing analysis, coming up with an objective opinion and then giving that opinion then to clients or whatnot. So it's going to be interesting to kind of have that kind of more of an objective perspective. It's going to be fun.
Yeah, I think that's one of the things that's missing as well, is because we have the Singapore Fintech Festival coming up shortly, and with that, it's rah Singapore Fintech, all of this, and there's not enough criticism of what happens, and then not enough I think that's a good word, realism around what's possible and what's not possible, and kind of picking through some of these business models. So we take a bit of pride in trying to take a realistic stance. If somebody's doing well, yeah, they're doing well. But if somebody's like some of these digital bank business models or some of the other business models that are out there, you're just like, I don't know. But it's difficult to take that stance when everybody's drinking the Kool-Aid, right?
Exactly, because I think everyone's raising on hopium. You know what I mean? Just like pure hope, and just like even when we were talking with Ned earlier, like even Ned said to me that like, you can raise money on a slide deck with no product or no idea. That's the irony of it, and then that's the growth trajectory of it. It's the marketing play. So I think your idea is much more like realistic, and we'll get into that. So where I want to start is kind of asking you about like, why do you do what you do? Because you've been at this game for a long time. I've been watching some of your earlier YouTube videos, and you had fully black hair at the time as well.
Thanks,
and that was like 10 years ago, 15 years ago.
Yeah. So briefly on my background, I'm Canadian by birth, grew up in the States, studied computer science undergrad, then went to work for Citibank in Europe. So I was in London originally, and then Switzerland, and then London again, and then Portugal, and always on the IT side. So always technology, and how is the bank using technology to support all of its activities. And so when I left, I was the head of technology for Citigroup in Portugal. So basically looking after all of the, what you would call DevOps, or development and operations, for the branch of, it was only about 150 people, but 5 different business lines across private banking, cards, trading, everything else. Went back to do my MBA, and then came out to China with Intel in 2004. So, 2004 in China was a very early time in everything around fintech, right? I remember going to, the only way I could pay my rent at the time was to go to my bank, and because the limits on ATM transactions were so low at that point, I couldn't even take the money out of the ATM. I had to go to the teller, so I had to queue for half an hour at my bank to go to the teller. My bank wasn't as sophisticated as my landlord's bank, so I had to actually sit in a chair, and then as the next person went, you'd shift down a chair. Like there was no number queuing or anything like this, and then wait half an hour and take out the $1,000 roughly that I needed, in equivalent in renminbi, walk it across the street and deposit in my landlord's account. And his bank was nicer because he had a number queue system. So I could take a number, and then I'd go off and have lunch and come back in about 35 minutes. And if I was lucky, my number hadn't been called. But if I wasn't, then... So, fast forward, I spent 14 years. And when I left in 2018, I was paying my staff using WeChat. I was, paying my utilities using Alipay. I invested in products from Baidu. The nature of fintech completely changed in China over those 14 years.
Why was that, do you think?
Look, you have a population of 1.4 billion people that have access to technology. It's a digital first economy, and largely mobile first. If you look at PC ownership in the US, it'll be like 83%. In other words, 83% of households have a computer. In China, that's more like 50%. But smartphone penetration is like 75%. Now, there are cultural things around that as well, because you think about the one-child policy that was that was around for a long time, is like kids, when they come home from school, there's a lot of pressure to study, so they study. And then once you're done talking to your parents, who else are you going to talk to, right? You don't have any brothers or sisters, so you're going to be on your phone, you're going to be on your device. So it's kind of that digital first, ubiquitous smartphones, and then, points of friction as well. And I think that's one of the big lessons of China is like, you look at Alipay and WeChat Pay. Alipay was initially set up to solve the point of the challenge of trust in e-commerce payments, right? So at the time in 2004, when the large Chinese platforms Taobao and Tmall set up, when you paid for something, it would be cash on delivery or it would be a bank transfer. So the problem with bank transfer is that it's one way, right? So if you pay and you want a refund or you want your money back, you have to convince the merchant to send you back the money, right? So it's a two-step transaction. Whereas with a credit card, there are chargeback mechanisms, there's escrow and things like this. And then on the cash on delivery side, obviously that has its own risks. You could order something and get a pile of bricks. The buyer could just say, nah, I don't want this. The delivery person could run off with the money, all kinds of risks around that. So what Alibaba and more particularly Jack Ma said is, look, we have to solve this issue. And so they launched Alipay. And there's nothing sexy about Alipay at the very beginning. In fact, if you go to the Ant Financial headquarters or Ant Group headquarters in Hangzhou, there's a framed spreadsheet on the wall, a printed out Excel spreadsheet or whatever software they were using at the time, that shows the initial Alipay transactions. Like, it was a very simple system, but it provided escrow and trust in e-commerce. And so it solved that pain point. And then around wealth management and all of these other products or services, it really built on that.
That's crazy, because I was studying and financial Alipay in university, and at the time it seemed like no one else could do it, because that was 2015, 2016, 2017. It was all just wealth management, insurance products, everything else integrated. But they were like just so far ahead of everybody else though. China, like, do you think it was due to, like, of course they had the population growth and there was all that kind of the boom that they needed to accommodate, but did they really look at some of the inefficiencies that were happening across the world? Like, even US today is still hugely fragmented. Like some of my partner is from the US. Her parents are like baffled by Revolut. Just a single payment, straight transactions. They're still used to bank transfers,
Yep. I think it's, when you look at other markets, if you wanted to do this in the US in 2004, there's all kinds of regulation, right? If you want to process payments in the US, you have to go state by state, which means 50 states plus, probably some national charters that you need to get and licensing you need to get as well. At the time in China in 2004, there was no licensing for payments until around 2011. 2010, 2011, they issued licenses, and then there were regulations around 2015. So you had about a decade where companies could pretty much do whatever they wanted. And the idea of, it seems a little bit more possible to us now, but the idea of an Amazon or a Google doing a financial product 10 years ago would have been unheard of. Yeah. But you think about all the innovation those companies have brought in non-financial products, like if they were given access to the market, they could have done the same thing, right? But I think it's, you have these innovative minds that see the challenges in the ecosystem, and they decide, okay, look, we can address these points of friction. There's no regulations in place to control us. I mean, that probably wasn't the first point of thought. That wasn't
what they were thinking, but there was none,
Yeah. So it just, the government had this kind of wait and see approach to regulation around it. And so companies took advantage of that. And to the benefit of people, we've had conversations with people all over China that have benefited tremendously and provided, financial inclusion for themselves, their families, economic empowerment. It's incredible what these have done, which is why the current kind of Chinese party, the Communist Party there is a little bit disappointing, the direction they're going in terms of stifling all of this tech. So it seems to be going from soft tech to hard tech, right? They're still focused on chips and everything else because chips don't really threaten any kind of national security interests or, have any geopolitical risk. But when you talk about soft tech, like software and platforms, then that's where they get a little bit more stringent.
It's weird because they were going so far ahead with all that stuff, and it was really, really forward moving. And then it just looked like 2018, 2019, 2020 just really went in and stopped it. Was there a particular reason why you think that politically or from a surveillance perspective, whatever, they completely change angle, because now I suppose the public perception of China is a lot different. And I know I spoke to you previously that I had Richard Hearn on my show, and he was saying that it's funny because the opinion of China from within China of Chinese people is a lot different than what's on the outside. So it's kind of hard to know. It's hard to know what the actual perception is like. You just got to see it as the fact. And the fact is that they are closing down a lot of these payment rails or opportunities for foreigners to come there and invest there and get involved in the economy.
Yeah, I mean, the priority of the Chinese government has never been foreigners, right? That being said, there are some colossal missteps that companies have taken. Like PayPal was there. PayPal and eBay, when they were still together, were there in 2004, 2005. And so they basically took the approach, look, this works in Anglophone countries, so it works in the US, works in the UK. Let's just take this model and put it in China. But it doesn't work, right? Like it's horses for courses, right? And so at the time, Taobao was like, okay, if you're a merchant, you list for free, right? We don't charge you anything. And so they built up the platform and they got people on it. But with eBay, they're like, no, you have to pay, right? You have to pay to make these transactions and everything else. And it just didn't fit. And the same thing with Uber, right? Uber, one of the big mistakes of Uber is not incorporating the local taxi population, whereas Didi brought in taxis into the ecosystem, right? And so, it wasn't just private drivers, but it was taxis and everything else that, I know Uber has obviously changed, but, there's a lot of hubris. And I always say that, the road to China is littered by the carcasses of foreign technology companies that have tried to execute and failed, right? Because it's you can't go in there. It sounds so trite to say it, but you can't go in there with a strategy for everywhere else. You have to have a very local strategy and a local understanding of what's there.
It makes sense because even in contrast, if you were to dump a Chinese company like Baidu into San Francisco, there would be so much pushback. Technically, just culturally, these are just things that kind of happen. So it kind of makes sense that China would protect their own companies first because they're trying to grow them. And then if you come in, okay, you do pay a tax on transactions or whatever it is. Some of those companies that you mentioned, so Baidu in particular, I don't even know some of the other ones, but even like Tencent isn't listed on the US on Nasdaq. No, it's
ADRs, I believe.
ADR, okay. But all of those stocks are like hammered. I've actually saw something recently that like a lot of them are down 50 to 80%. Do you think that like that's a reflection of Chinese economy, or is that just the market's reaction overall?
I think it's a reflection of the political party, right? The fact that Xi is now in for at least another 5 years. He's been very harsh. This whole crackdown has obviously come under his watch, right? And his push. And I think, when you look back at what started it, again, I hate to say that it was a comment by Jack Ma, but it really was his comments at the Shanghai Bund forum that kind of set this whole thing off. And I think they were probably thinking about the crackdown in the background, that we have to start looking at this. But then that I think kicked things off.
What were his comments?
He was very critical about the commercial banks and the government and the way that they were, the inefficiencies within the financial industry. And, I don't consider myself a China expert. I speak a bit of Chinese. I lived there for a period of time, but there are people that understand and are much closer to local, both obviously Chinese nationals that are observers and then foreigners that look at it. But it's very difficult to see where things go now. And you can see that even with the littlest things. Like, I don't know if you watched the Party Congress, but Hu Jintao was like pulled away partway through the discussion. There's a video of him, being pulled away by two of the staff, and then he says something to Xi, and then he's taken off stage. And just nobody understands. Nobody outside of the party really understands why that happened. And I think similarly, this tech crackdown, this has been the golden egg for China over the past decade. I think, when I go back to 2004, there was a lot of pushback around China because, there was the lead-filled Barbies, there was the R&D, which is in Chinese terms at the time was like rob and duplicate rather than actually do your own innovation. And so like when I look at that initial time that I was in China, people were very anti-China for those reasons, like, they were just copying everything else. But all of a sudden you had these tech companies that were creating new things. And I think there was a lot more China became a lot more interesting to foreigners and saying, wow, these guys are really doing something different. And it really did differentiate. And it was incredible for the people, again, like that we talked to for a lot of the reports that we've done that, whether it's a scooter salesman in Hangzhou or somebody living in one of the faraway cities that's used these platforms and used these tools to change their lives, for the government to walk back everything that's happened, I mean, primary concern is keeping the people happy and then keeping the industries stable, right? So we don't want the financial industry to collapse in China. But at the same time, you can leave the doors open for a little bit of innovation around that. And I think that's the risk that China runs with the current direction now.
Because people are less incentivized. If you think about it overall, there's less of a natural incentive. It kind of paves way as well to, I know there's a lot of things we can get into, but, just looking at central bank digital currencies, as in, it seems like I've had a couple of other people on my podcast. I think I mentioned to you before, Robert Breedlove, big, Freedom Maxi, Bitcoin Maxi, very harsh critic on central bank digital currencies, mainly for the reason that it takes a lot of the inspiration from Bitcoin and brings it into a centralized approach. So just think understanding that kind of concept, when China are really pushing hard on central bank digital currencies, they're even closing the door more now to other opportunities, of course, in a crypto sense, but also in a fintech sense. There's less of an actual chance to go and do something new.
Yes and no. I think, with the central bank digital currencies, there was a lot of consternation and going back and forth about whether these would be integrated into Alipay and WeChat Pay. And both companies, Tencent and Ant Financial and now Ant Group, have had a deep relationship with the Chinese government and regulators in terms of creating tools, right? So a number of years ago, there was a platform called Nets Union or Wanglian that basically serves as a clearing platform for all digital payments now. And Tencent and Ant Financial, that was a private-public partnership, and they contributed to the technology to be able to do that. So there's always been this kind of, symbiotic, sometimes symbiotic, sometimes not, relationship between the companies that has always been there. But I think the CBDC kind of baselines, okay, this is what you have to work with in the future, and you have to work around that. So, in the Alipay, in WeChat and Alipay, there's a option for holding the eCNY in your Alipay or WeChat Pay wallet, right? So they have to kind of go along with that. I think and in that environment, when you talk about CBDCs in general, the argument for CBDCs is only coming from the government. And honestly, if governments were honest about what they were looking at, it's about visibility and control, right? It's the ability to look at the transactions, understand about what's happening, and then have the programmability within that currency to affect things. And in a good scenario, that could be things like SME lending. That's one of the challenges in China, is that state-owned banks, even though they're all publicly listed in Hong Kong or other places, there's still a high single-digit percentage of government ownership of those entities. And so historically, because they were completely state-owned before they listed, and obviously you have a lot of state-owned enterprises like PetroChina, Costco, all of these large entities, the state-owned banks tended to lend to state-owned enterprises. So even if the government was like, okay, look, we want to earmark this billion renminbi for small, medium enterprises, banks go lend to small, medium enterprises, Bank of China would go, look, I can lend to Zennon at 5%, or I can lend to PetroChina at 4.5%. I'm probably going to lend to PetroChina because I'll probably get my money back. And so a lot of the money was directed towards these state-owned enterprises. So if you have a programmable cryptocurrency or a programmable central bank digital currency, you can say, okay, this is not activated until it hits the wallet of an SME. That's good, right? That provides a lot of, good.
It's good in a vacuum. With a lot of things, you can look at it in isolation, say, well, now this small SME has been analysed and we can give a score and assign a score to it. But it leaves very little room to human manipulation or human intervention to the point whereby it can be taken out of context.
Yeah, but to a certain extent, that's the way finance should be, right? We shouldn't be measuring SME's credit based on what we think, but rather what the numbers tell us or what objective measures tell us.
But could it be taken advantage of? Does that make sense? As in, you're looking at those numbers and you're thinking, well, I don't want to actually give it to you could say the baseline score is 4, but because I want to give it to these people over here that I know and I'm doing deals with on the side, I want to increase this to 4.5. Does that make sense? Just small, kind of the way humans collectively put their mind together and try to negatively impact a scenario.
Yeah. Well, historically, that would have been possible. But now, if you do have this programmable digital currency, the bank gets this billion renminbi, because a lot of the fiscal controls go through banks in China. So the government will adjust the reserve ratio and then banks can lend out more. That's the way they handle a lot of their monetary and fiscal policy. And so picture that scenario where the bank gets this billion RMB and they're like, oh, I'm going to lend it out to a state-owned enterprise. And then the CBDC is like, no, you're not. You're going to lend it to SMEs. That's good, right? But the flip side of that is that, anybody's wallet could be shut down. Anybody's wallet could be drained. I mean, this was the problem. We had this in Cyprus a number of years ago. And I'm by far not a Bitcoin maximalist in any state. But, in Cyprus, there was a haircut a number of years ago. That was, it was probably about a decade ago, where it's like 7 or 8%, I believe, haircut on all money in bank accounts in Cyprus. And so there were huge queues at the ATM because people knew this was going to happen and they were trying to take their money out. But, you get to the point that when you have that much control over what's in your pocket, like that's why people buy gold or US dollars to stuff in their mattress to, protect themselves against this. And I think that's the downside of a central bank digital currency is all of a sudden it becomes much easier for that to happen. And we have the belief, when I was in Europe over the past, a couple of weeks ago for Sibos, I mean, CBDCs were a big thing there. And they're going to say, oh, it's going to be completely private because you have GDPR, which is the privacy regulation there. And it works until it doesn't, right?
Yeah,
and
of course.
If something goes south with, a government, you still have your gold bar, right? But if something goes south with the government, are you still going to have your CBDC? Things change.
It takes one bad actor.
Yeah.
And that's what happens. It's like, if you look at things, that's kind of why I mentioned it in terms of a vacuum, because like, if you look at it in terms of theory, logic, database design, you're like, okay, this may make sense. But if you just take one bad actor who wants to take advantage of it, or a government who's a new government that's coming in with a different regime, says we want to monitor and track individuals, it's very difficult to see that line being drawn. And there's actually one clip I want to share with you. I think it was from the UN. It was a spokesperson from the UN saying that they want I think it was UN, I'll send it to you. It was like they want the visibility of it to know that there's no negative or dangerous transactions going on. But at the same time, with that power, to quote Spider-Man, comes great responsibility. You know, you literally take something like that and you can pull it out of context.
And you can never say governments will never do it, right? Because they
have
the data is there, right? Like regardless if your transaction is private, the data is there. So if the government wants to do that, and China is the best case for that, right? Like if the government, all of the tech companies in China have somebody from the Communist Party that sits within the company and monitors the company. They're literally on site in the company and they monitor, and the bigger companies obviously have more of those people, but the party has direct look into these organizations. And you can be sure, and I'm not pointing fingers at China. I mean, this happens anywhere. It happens in the US or Canada. You can be sure that there's been times where the government has been like, can you tell me what Mr. Joe's transactions were over the past month without probable cause or anything else? There's typically a process for something like that, but in a place like China, there doesn't need to be any due process around that. I have friends that actually non-Chinese nationals that cannot leave the country because they're on a blacklist, but the government won't tell them why. There's no due process in terms of that. So, some people say, oh, the transactions are completely private. Well, they are until they're not, right? And the argument in general for CBDCs, again, I think is around visibility and control. And in the context of China, where the government has so much visibility and surveillance capability, it becomes, it can happen.
Of course. And I think it's funny because I suppose like people that are outside of China realize that this is kind of going to happen in China to some degree, that there will be someone who says, show me Joe's transactions. But where there's a bit of a misconception or misunderstanding, I think, is like in Europe, people who live in Europe are very much under the belief that like the EU kind of has their back and is it's a safe place, it's a democratic kind of state, all of EU. And they don't kind of realize that this could also happen under that lens. And then in the US vocalize their opinion a lot more. And I suppose they are a bit more, they're less accepting of a central bank digital currency. But again, how many times has like either the CIA or some sort of overall like entity in the US gone and actually checked these types of things? So they're kind of anticipating in the US, but Europe is a funny zone because it's the one where the economy has been going kind of all over the place recently. A lot of the numbers around inflation and stuff are completely misreported. If you take like anecdotal examples of what's happening in a certain country, or you just take like actual numerics that are coming out, doesn't look completely correct. And then I just think that some of this is a slippery slope that maybe, let's say, and this is very, I suppose, kind of doom and gloom looking at it, But it's not until Europe is the China of 2004 that was booming, and then it's 20 years later and you're thinking, well, they shouldn't have started that in the first place. Does that make sense? If that Monday morning quarterbacking.
Yeah, I mean, I think about the financial industry, and they have like AML, anti-money laundering, and checks to, and one of the rationale for that is terrorism financing. And like, if there were actually as many terrorists as the regulations would seem to indicate, then you wouldn't be driving anywhere and you'd be scared your car was going to blow up, right? Like, yeah. I mean, it's a good excuse, and all you need is that, right? Like, I mean, we saw that with the Patriot Act in the U.S. and some of the Snowden revelations, is that the government just needs a little bit of an excuse that says, okay, look, I'm looking to protect you, but I'm going to scan all your phone metadata. You know, those kind of things that, you know, we've had 70 years of prosperity where we haven't had any, major world wars. But, there was a particular day that things shifted that kicked off World War I and World War II and these larger conflicts, right? And one of those things to happen, again, I'm not a black swan kind of or Bitcoin maximalist in any of these things, but all you need is one thing like that, and then all bets are off.
100%. And you've seen it with the valuation of currencies falling just completely. And like, some of them are, like, there was a blip on GDP that happened like a month ago, and I was awake for when it happened in Asia at the time, and it just completely nosedived and bounced back. There's loads of things like this that are happening underneath the surface, that maybe 5 years ago, when we were in a huge bull run of every industry, every market, the stock market as well, people would think, people thinking very all on the conspiracy side. But the reality is a lot of this stuff kind of materialized, and we did just spend 2 years in lockdown, and coming out of it, there's all these new things are emerging, and that's kind of what happens a lot of time, is that when the dust settles, these new rules are in place.
Yep.
And then it'll be launched, and it's funny because you said that about governments never talked about central bank digital currencies until it was them that was rolling it out, but never happened until after crypto came out, after Bitcoin was starting to take a bit of traction. They came in and had this new perspective.
Yep.
Strange.
Well, the other thing about central bank digital currencies is, do we really need them? Like, payments in China were already very efficient. They were already, reasonably cheap compared to other places. Like, there's no kind of pain point issue around these that, central bank digital currencies fulfill. It's really, I mean, okay, you could argue that it's more efficient, right? Like, you're replacing M0, M1 with digital form, which I believe is going to happen anyways. I mean, if we look 20 years, like more longer term, I think every country will have a central bank digital currency, whether it's their own or they're part of another one or whatever the case is. I think that's the direction we're going, and cash will disappear because right now cash is still relevant, and you have countries like Sweden, right? In Sweden, I think passed a law basically saying that stores have to accept cash because it was getting so anti-cash. And like, when I spent a week and a half in Europe for Sibos in Amsterdam and then in London, and I used cash once because I wanted to get rid of some coins. Yeah. Because I had this big bag of coins that I brought with me that I wanted to get rid of some euros, but otherwise you're just using card all the time. So people are very used to going digital, and I think it's the older generation that still struggle with cash in certain environments. But then, the good thing about the ECNY is they have the card, right? So they have essentially your wallet on a card, and ECNY works completely offline as well. So in terms of financial inclusion, it's pretty powerful. So I think, cash isn't particularly efficient. It's expensive, all of these things. So I think in longer term, it'll disappear. So it's, I guess CBDCs are not an if, but a when for most countries.
And how do you think people will react to that? So like places like America that are very like outspoken, and more places that really don't want to bring it in, like, how will normal people react to it?
I don't think the average person really cares to a certain extent. I mean,
really, because there is a small minority that are very vocal on it.
But it's a small minority, right? Like,
they have good consideration though as well. Does that make sense, that they can motivate the middle bracket to give a shit? Does that make sense?
I mean, you have to be realistic about people's approach to privacy, right? Like, in your pocket, my pocket, I've got my mobile phone, and I've got a US SIM card. It's a Chinese phone. I've got a Singapore SIM card. So really, at any point, if the Chinese government, the American government, or the Singapore government wanted to pinpoint where I was and hack into my phone, they probably could, right? And we've given up that privacy because the convenience of having a phone to take anywhere. And it's funny because you there's a video out there about Edward Snowden recommending phones, I think, like the best phones. And the best phone is like, it dual boots into a separate kernel within the phone, and you can do texts. Like, who wants that, right? So you're always making these choices. And I think, the average person, do I really care? Like, if somebody accessed all my data, do I have that much to hide? I pay my taxes. I don't have money in many offshore accounts and all of this. So do I really care? So I think for the average person, they're probably not going to care too much. Now, the people that are doing something wrong, like, obviously they're going to be anti this, but I think it's a slow walk, right? I mean, we're facing this in the US right now, regardless of your position on it. Who thought that abortion would be illegal? And that's what's happening, and this kind of happens. It's the frog in a pot, which apparently isn't true, but it's frog in a pot where we're, gradually changing the temperature and nobody notices. And then all of a sudden we're 20 years later and everything's different.
The digital world is completely changing in that way, that it's just constantly small, minor, not necessarily improvements, but minor changes that compound. It's like anything of a compound change, How do you think that will happen for developing countries? So I saw you recently wrote about India and you wrote about Cambodia, so particularly cash heavy, inflated currencies. I saw something recently, it was someone that was in Costa Rica or Venezuela. They were paying for their dinner anyway, and they put all the money on a table for a dinner, and it literally covered every inch of the table, all notes. So how do you think that will kind of develop there in terms of maybe the benefits, but also some considerations of how that could happen?
I think, a big challenge that we face here in Asia is financial inclusion. And the World Bank just released their 2021 data for the Findex. And there's been, tremendous in certain countries like India. It used to be that 30% of the population, I think in 2014, it was like 30 or 40% of the population was financially included. And then in 2017, it was about 70%, and now it's 85, 90% is included, and it's a huge country and it's a huge ask. And India's done a really good job with the India Stack and UPI and Aadhaar and all of this to enable that. So I think there's a huge proven benefit for financial inclusion in developing countries. But the question here, like in Singapore, is 98% of the population is banked. We just had a trust bank launch here a little while ago, which is a new digital bank. And I was having a conversation with a couple of bankers yesterday, and granted they work for traditional banks, and like, why do you use it? One guy turned off his account. I was like, why did you, he shut down his account, basically, the trust. And I said, why did you do that? And he says, well, I'm trying to clean up my life and, consolidate into one of the local banks, his mortgage and everything else he was doing. But it's just like, I don't see the point,
But they're very slow, the traditional banks, not necessarily Singapore, but in general. And for younger people, especially, who just need things continuously.
Yeah.
That's why Revolut has moved so quickly for younger people.
Yeah.
In particular, and older people, a lot of older bracket as well. The demographic is quite old because it's very simple to use.
Yeah, I think, in developed markets, it tends to be 3 to 5 banks that control 80 to 90% of the retail deposits. So here in Singapore, it'd be DBS, UOB, OCBC, the local banks, and foreign banks kind of nip around the edges, but not too much. In Australia, it would be CBA, NAB, and a couple of others. And oftentimes they get a little bit stagnant. And so we saw this in Hong Kong, right? Like HSBC used to charge minimum fees, the transfers used to be much more expensive. Digital banks came in and it forced HSBC to change. And it's the same thing here. The banks, there's a lot more competition because of these fintechs coming in, because of Revolut and Wise and all of the other players, especially in the cross-border space. So, DBS now has DBS Remit. And I had the experience, we had to move some money to Hong Kong in US dollars. And so I wired from the US, my bank in the US, for the pleasure of sending $10,000 or whatever it was, charged me $25, and I wired it to my wife's bank account, a local bank here at DBS actually, in US dollars, and then she wired it to Hong Kong in US dollars because it had to be in her name. And there were no fees on her side. Obviously she was sending US dollars, so there was no FX, but there was, the full amount I think was 20,000. So the 20,000 from her account was still 20,000 whole when it got to Hong Kong. And that's, I picture when I first came to the UK as an example, it was the first time I was kind of working abroad and I had to wire money home. And it was like, it was a wing and a prayer, right?
Yeah.
Like you put in the transfer and you kind of hope that in a few days it gets there.
Literally.
But now, Revolut and Wise, like I know exactly when my money is going to get there. If it changes, like if I had Wise change it on me, like, okay, it's going to be a couple hours later, they'll tell you, the visibility and transparency that you have. But you can't underestimate the ability of traditional banks to innovate, right? Like DBS is a good example, right? Now there's no fees for accounts. There's DigiBank. You can set it up completely online, and the ATM card comes in a couple of different days. One of the arguments for trust that somebody gave to me was, they issue the card and I can use it in my Google Play, my Google Pay app right afterwards, or I can use it on Apple Pay right afterwards. Yeah, fine. So I have to, get it immediately as opposed to waiting 2 days. Do I really care about that? Probably not, right? And so HSBC in Hong Kong, DBS here, no fees. We kind of forget that banks are sitting on really heavy margins, especially now with interest rates going up. So they can squeeze those, right? And they can come up with new products and services. And I think that's the biggest challenge.
Yeah, it's interesting. I think, for someone like yourself, the use case is really clear like that. You want to minimize your fees and cross-border. And I think that coming from, Europe, it wasn't that familiar to me because everything's in euro, and there's so much countries that use euro, but I only realized the severity of it when I kind of got here. And Revolut do a really good approach on that. But it's funny because like some of those fintech firms are not widely accepted by other commercial banks. So some of the payments are actually blocked sometimes if you use like Wise or whatnot. So it becomes like, a race to the bottom for the fees. And then I think for younger people, it's a UX UI thing. For sure, it's a huge part of it. The fact that you can split bills on Revolut very easily, you can, share bills, share some subscriptions. It makes, I think, it gets appeal to the younger generation easier and a lot more. So that now a lot of the bigger banks have to adjust and try, probably, catch up with that. I don't know will they ever get there in terms of UX UI, but maybe they can do some different types of offerings.
Yeah. And going back to the China part of the conversation, I mean, that's what WeChat and Alipay did amazingly. Like when Yuebao, which is the wealth management product from Ant Group, was first launched, foreigners could participate, could buy. And so I bought some just to test it out. And you're essentially, to explain what it is historically in China, wealth management products, you'd have to go into the branch, sit down with a salesperson, fill out a number of forms, deposit minimum of the equivalent of like $1,000 for a month, which for a lot of people is a big ask. Like if you ask
a lot more in Ireland.
Yeah.
If it's 5,000, 10,000, yeah. Some of the traditional brokers that are starving at the moment,
Yeah. So what Yuebao did was democratized, right? So you could use money that was in your Alipay wallet, move it into Yuebao instantaneously, start earning interest tomorrow. And literally, I don't know if it's the case now, but at that time you could, like if I had 100 renminbi in my wallet and I wanted it back in my bank account, it would take anywhere from about 5 minutes to 2 hours to come back to my bank account and be back in my bank account. So there was no minimum. There was no, both in terms of time or amount. So you could put 1 renminbi in there. And the UX was incredible. Like you open up the app and it shows you in big numbers how much money you made yesterday. And, somebody might say that, 2.3 renminbi is, the equivalent of like 50 US cents. Isn't that exciting? But it's kind of fun.
It's the way they do it.
Yeah.
It's a gamification of
it. Yeah. So I think that UX, and I always talk about all of these platforms like TikTok, like one of the key points in any presentation I do is like, you may not understand TikTok, but you better understand TikTok. And the idea here is like, a friend of mine used to work for Snap years ago, and he was head of data for Snap, and so Snapchat, and I met up with him in New York, and we sat down, we had a coffee, and after 45 minutes of seeing pictures of his kids with googly eyes and animated pigs in the background and messages disappearing after 20 seconds, like, I still don't understand why people use Snapchat. And I installed it, and I uninstalled it a day later. And originally I said, you better understand Snapchat. And then I gave that presentation. They said, it's not Snapchat, it's Instagram. And so I did the same thing. I installed Instagram. I used it for 5 minutes and I was like, I don't get it. And I uninstalled it. And then I was giving the presentation and I said, you better understand Instagram. And they said, forget about Instagram, it's TikTok, right? And I installed, same thing. I installed TikTok. I don't get it. I uninstalled it. But I'm not the person that I need to sell to, It's the younger generation. It's those people that want that interface and want to be given products where they operate, right? And people don't operate in a bank app. They operate in WeChat. They operate in WhatsApp. They operate in, all of these other apps.
But they try to pull them in together. And that's the super app approach, isn't it?
Yeah, which is difficult.
It is difficult. I'd like to get your thoughts on that too, because so you touched on such a great point there. So I think what you're alluding to really is that kind of gamification model of it, of how that works. And I had this guy called Adrian Hahn on my show. So his background is in game development. He had this game called Zombies Run, which is like a very big like app, like millions of downloads. But his whole idea, so the whole idea about game development is retention. They have all these really cool retention curves from day one, what a user does and how long they stay on the app. So let's say from day 30, day 60, day 90, and it's all about retention. And he said that model is being used everywhere now elsewhere. And gamification can be used positively because we want people to, let's say, if it's Strava, there's a good reward system. People are like doing, small ladder games and championships, and it makes them more healthy. But then they bring that into, let's say, like a TikTok sense. And of course, it's just taken out of context, it's super on steroids, and people are just like super, super addicted to it. That gamification element was really brought into finance as well. And they were able to, as your point, you open up your wealth management and you see that small increase. And the increase is irrelevant. The actual number is irrelevant. You just get that small hit of dopamine. And the flip side works. We're so opposed to losing money that loss aversion kicks in the second you see small bits of a decline of it. And you become more addicted to it. And that's why one of the guys on my podcast before was saying that he was sitting in line, like ordering like a coffee, and there was a guy looking at a Bitcoin price chart on a 1 day chart, on a 1 minute chart, just looking at it, waiting for a cup of coffee. And that's where it's got to. Does that make sense? That's where all of this comes together, because you take those product managers, product designers who worked at the best companies, who worked at game companies, and you move them into a finance sense. And that's why people come back to the apps continuously.
I think I agree with you. I think the challenge with gamification is it needs to be non-obvious. One of my favorite apps here in Singapore is Healthy 365, which it's the silliest thing, and it's kind of but it tracks steps, right? So it links up with my Garmin. When my Garmin syncs, it tells me if I've done steps. And then if you do 10,000, it cuts off, I think, 2,500, 5,000, 10,000 steps. And if you do 10,000 steps, you get a couple of points, and then, you can redeem the points for NTUC vouchers. And it's like $5 for you have to walk 10,000 steps for 2 weeks and you get $5 or something like that. It's I'm probably way off on that, but it's just there, right? And it's just happening in the background. I don't really have to. And there's been within the crypto space, there's these platforms called Step In and everything else that are kind of focused on this element of things. And I think, where it's something that's very streamlined into your everyday habits. The famous one from Ant Group was Ant Forest, right? Where you can, by using your phone to tap in at the metro, or taking a taxi as opposed to taking your own car, you could get these points which could be redeemed for a tree, and you see your virtual tree, and once you get it to a certain size, they'll actually plant a physical tree in China, in one of the more arid regions of China. And so that really gets people thinking about some of these things. And I think whenever you can do that in a non-obvious way, so people don't know they're being gamified. But
true, it's just that I think the word gamification is probably taken out of context at this stage, because it's all was kind of been around that, even from the earlier video games, is how they're designed. It's just about the fact that when we bring this into like Robinhood's a really good example, because Robinhood was it was just this kind of flagship project that basically had very little kind of guardrails and borders around it, and you had just extreme gamification coming off continuously. That's why actually the SEC has cracked down on things like confetti in UX design. So you can't get like surprises coming out, you can't get like pop-ups as much as what you used to be able to, and even color, which is funny, because if your branding is green and red, well, now you still can't display those color brandings. And these are things that are genuinely coming out of the SEC at the moment, is that we want to crack down on like color design, even though the prices of stocks and ETFs are continuously going up and down. Things to be conscious of when you're going into actual development,
Yeah. And that's the downside of digital. I think back to when my parents were trading stocks. They never traded actively, but whenever they needed to trade something, they'd have to call up their broker, right?
Yeah.
So this would have been like 90s or so. And it wasn't so immediately accessible. So your ability to screw up your own financial life was still a phone call away, and you had to talk to somebody who was sensible. But now, like, your ability to really screw up your financial life is right there on your phone, right? Whether that's, I'm not saying bad things about crypto, but you can lose a lot of money in crypto. You can lose a lot of money on Robinhood or trading FX futures or whatever it is, right? And I think that's where I think, the SEC, despite, not cracking down on Elon on some of his tweets and everything else, is doing some things right by like, look, we've got to protect this because it's just becoming so easy to do these things. And that's the problem. It's not just finance, but digital in general, right?
Yeah.
Like kids having access to these platforms and predators on the platforms and what are they posting on the platforms? I mean, this is a whole new set of questions that for my son, who's now 4 years old, like that's the only thing I'm scared about is like his relationship with digital is like, he's going to be raised. I mean, we have good values, hopefully, I think. So he'll be raised with those, but like the access to the digital side of things is kind of scary. Like I know myself, so I know like what I have control over, what I don't have control of, but with him and the younger generation being exposed to this, it's a bit scary.
I've had to do a lot of digital cleansing even myself because, I'm 26, but even when I was 24, 25, just like always on like Instagram, always on just like these social media platforms, just consuming stuff. And like I'd be pretty strong like mentally. I know I have a good idea where I want to go to or what I want to do, but I always felt that like I was kind of just like hindered by these things. I was just looking at some stuff that was just kind of pointless. It didn't have much value to me, and I was just consuming. And I felt like when I was like relaxing and I was on Instagram, I was just kind of going backwards. That makes sense. And I wasn't like resting. So I had to do a really, really big clean. Pretty much deactivated most apps and then have no notifications on anything. If I want to do something, so of course I post similar to yourself, very regularly online, I need to voluntarily go to a platform and go in, post, maybe check my notifications and move on. Or use a scheduling tool, which I use a couple of them now. Some of them are good, some of them are kind of shit. Get everything up on there and then just forget about it, because I felt like that there was just so much emphasis on being on these platforms and even on being on CNBC and reading trading news and stuff continuously that I felt like it had such a net negative influence on my life. I just had to go cut straight out.
Yeah.
And what I'm saying is that, someone who's quite mature and, 26, making those decisions was a little bit easier than someone who's 12, 14, 16, who's male, female, a bit more self-conscious, a bit more open towards criticism and conscientious of what's going on around them. It's a dangerous game,
Yeah, and I'm not sure if Ned had said this in his podcast or not, but he really doesn't give a shit what people think, right? Like he's doing his thing and he's happy doing it. And I think that comes with age. Like it
comes with age.
I don't really care what people say because it's, I'm doing what I want to do. But that self-actualization and realization doesn't happen until later. And so I think, when you're, I distinctly remember in the non-digital space, like needing fulfillment and needing these things when I was young, validation of whatever sort, to be able to deal with that. And now, you get your validation from a digital platform, and that's,
I gave a speech, was it yesterday or 2 days ago at a university, and the biggest thing I was discussing was like, when we're younger, there's all this like noise. And there's just so much there's just constant interruptions, and usually it could be like your friend that's doing something really well or someone else that you don't particularly like that's doing really well. And then you feel then that you're kind of, you're falling behind. And if you can get clearer on what you actually want to do, focus in on that kind of goal, it makes things a lot easier then because you can kind of drown it all out. Yeah. And I think the biggest thing for me, probably similar to yourself, moving to Singapore. When I got here, I knew nobody here. Never mind, got here, just met a couple of people, was surrounded by people that I, really respected and really liked. And I think all those kind of small external validation elements just kind of went away. I kind of slowly faded out. But it's very difficult for people coming out of university. It's very difficult for people who are going into university, who are in high school, because there's just so much stuff going on continuously. And you're always victim towards those negative kind of sides of things. And it's amplified by the platforms being built around it.
Was anybody paying attention when you were giving that talk? Were they all looking at their phones, like swiping through Instagram or TikTok?
It was online, so I hope people were actually listening. Yeah. I can always judge by how much questions you get afterwards.
Yeah.
So if you get a couple of questions afterwards, you're like, okay, this has been
engaged.
But it's funny because like you tell me a lot of good, helpful stuff from time to time as well, and you listen to it, but you often have to realize these things for yourself before you can action it. And then you think back and you're like, fuck it, Zennon taught me that, and then it materialized when I went and did it myself or whatnot. Does that make sense?
But that's life, right? Like, one of my like side projects is writing a book for my kid, such that like these are my lessons on life. Everything from religion to like how to behave with the opposite sex to like buying property or assets or any of these things, like things that I've learned over time that I'd love him to shortcut. But I know when I give him that, whether he's 15 or 20 or 25, until he gets to that point, he's going to get to a point and say, oh, shit, I should have like read that, because it's common, right? Like these things are common to us as humans and the society and the fictions that we live in, as a society. But you have to get to the right point to kind of be ready to have that conversation with yourself and realize it yourself, I think, is the challenge.
What were some of the major lessons, I suppose, you learned from like developing your career and moving into different aspects and seeing like the fintech industry develop and move forward?
I think the biggest thing for me was more psychological than anything else. Like I remember working at Citibank at the time, and we were called technology infrastructure, Citigroup technology infrastructure. And we looked at people that worked in the private bank, even private bank technology, and we're like, you guys work in the private bank. Like, wow, super exciting. And there were a couple of opportunities to like shift businesses and like potentially move into the private bank technology or even work in the private bank. And, when I look back at that time, I am happy. I have no regrets about everything that happened, but it's ridiculous to have those ideas because everybody's human. Everybody shits and pisses the same. And somebody said to me, you're just a monkey with a plan. Like we're all just monkeys with plans, right? So the idea that I couldn't approach like the CEO of the company or somebody who worked in one of these groups, there's nothing to stop you from doing that. So like, I think that's been the biggest thing for me is like doing my own thing is just all of those pretenses around who this person is or what they do, whether they're a celebrity or a business person, senior, kind of drop away. Because at the end of the day, just a monkey with a plan.
It's so funny that you say that because I think, especially when I started my career as well, I was very impressionable, I think. Chip on my shoulder, young guy in London at the time. And I would have thought that like, okay, these people, like, when I get to the MD standard, you'd be very, very happy. And actually one of my friends, Simon Ree, he said that he had a tweet the other day saying that when he was in college, he thought that like an MD was like a CEO. And then he got to Goldman Sachs and he realized that everyone was an MD. So then he realized why it lost the value in it. But I think for me, like even starting my podcast, like of course I've spoke with some of the best authors in the world, some top CEOs in the world, and it's funny because like they're all just human at the end of the day. They're wondering like, are they going to fuck up on a camera? They're wondering how this is going to be perceived, and they just have a bit more experience, probably took more risks, probably a bit more smarter, a bit more clever in how they approach kind of life and stuff, but they all go back to the same kind of pretenses. And they all kind of come back to the same way, which was very eye-opening because that's what I kind of learned from this. Speaking about our crazy friend Ned, like when I look at Ned, I don't think, he has an amazing engine to run all these hours. I just think he has somehow unlocked a part of his brain that majority of us haven't done, and now he's able to do this. But it's very achievable for anyone. And then in a business sense then, it happens continuously. And I actually was speaking with Zach Bitter last week. You're a big runner as well. So he did the 100-mile world record. And for him, he got into running at like 24. He's running like he joined his university team, wherever it was, and got into it and thought he'd never run long distance. He'd never run like 30 kilometers, 40 kilometers. And he's running 100 milers all the time and winning the world record. Yeah.
I mean, one of the things that bothers me about conversations that I have with people is when they say I can't do that.
It's like my mom. My mom, man, says that. It pisses me off so
I think every mom says that.
It pisses me off. She's like, I can't do it. And I'm like, why can't you do it? I always like, are you in a wheelchair? Are you not able to get up? Are you not able to do this? Are you broke? You're not. I always say that.
Yeah. And just the fact that we're sitting here, you've got a Mac in front of you, we've got expensive equipment around us. We have all of the trappings and the ability to do this. Now, certainly there are people around the world that have much bigger problems than we do, but
definitely,
we're at a particular socioeconomic class that we can do pretty much whatever we want, right? And when somebody says I can't do that because of XYZ, that just like, I mean, will you ever be as good as Ned running the backyard marathon? Probably not, because he's got, you know, the screw loose that you need to have loose to be able to do that, but you can give it a shot and you can do it. There's nothing to stop you from doing that. And that's one thing I've tried to take can't out of my language, especially because now we have a son who's 4 years old. Like, I try to be home at 6 or 6:30, or like today I'll pick him up from school, because that's like, it's probably one of the more important things that I'll do in my life. And the work is fun and I enjoy doing all of these things, but you know, it's priorities, right? And so whenever somebody says, oh, I can't make it to the gym, or I can't do this, no, you can, you just don't have the priorities
in check
where you want.
I completely agree. Have you ever been familiar with a guy called Indigo Traveler on YouTube? You'd love it, because I know you're well into traveling yourself. He's a New Zealand guy who pretty much devoted his life to going to like the most extreme places in the world that are very impoverished, very, very poor. And then he does like documentaries around them. They're all kind of like vlogs, but then he'll do raises, he'll fundraise, and he'll raise like 50,000 a night. So he's done a couple on like Haiti, he's done a couple on like Brazil and whatnot. And some of those countries, it's 50-50, right? Because there's a lot of rich people, a lot of poor people, and there's kind of like this kind of weird kind of undercurrent. He went to South Sudan last week, and I'll send it on to you. You'll actually really enjoy it. I watched it with my girlfriend on Saturday morning. I was pretty much nearly in tears when watching it. South Sudan is the youngest country. It's only or the most recent country. Is that the youngest country? 9 years old. Civil war ever since. The whole country is torn to pieces, and the people are all in pretty much refugee camps, and they're not allowed to leave. So some of them have grown up there and they've been there for 10 years now at this stage. And those people literally don't have an out. And that's what becomes so difficult. They're all eating the protein bar kind of survival food. And they're in a UN center, bear in mind, a refugee camp, and it's all like falling down, and people like kind of local kind of bandits, kind of gangs will come in and try to rob the people that have nothing. And then I was just looking at it and I was thinking, I was like, that really is when you can't. You know, because for them, it's funny because, you know, sometimes you watch these documentaries and you're like, why not just flee to another country or something like this? Those people, if they do get out of the refugee camp, they're not allowed, they can't even get out of South Sudan. If they do get out of South Sudan, where are they going to go? Ivory Coast, Somalia, where are they going to go from there? You know, so it's very difficult scenarios, and, you know, it's something that I actually wish to actually invest in more, is actually being able to try to help those kind of people. And then the flip side, then you have people that do have this access to information, or at least access to information online or something like free resources, and don't action it, and then have the excuses then to say, oh, the typical example is like, you know, you don't have enough money and you're struggling for something. If the last 2 years hasn't taught you something, it's you need to be doing something on the side, you know, something small, something that's helpful. And I've spoken about this a lot on my podcast, is that, like, you know, for some people, $600 a month, if they can make it extra, is a difference between the rent. You know, if they're living with friends or whatever, $600 is probably enough. That is a huge impact on your life. And you can do something 5 to 10 hours a week. And does that make sense? It kind of gives, looking at those things gives me much more of a drive to say, I need to be doing something more because I have the availability to do something more.
Yeah, I think for me, I get what you're saying. I think for me, it's the end destination of what you're going to do with it, right? Like, I mean, and I think, you know, I do triathlon, so I know Ned through that a bit. And, you know, when I was younger, I always wanted the latest bike, right? Like, it's going to shave 2 seconds off a 10-hour race or something like this. It's like, it's these ridiculous outcomes that you think your life is going to be so much better once you have, whether it's a bike or a car or a bigger house. And at the end of the day, you're going to get to that point, and then you're going to want the next thing. You're going to want the next car. You want the next thing. And I think, you know, we see this here a lot in Singapore. You know, rather than spending $1 million on a Ferrari or a Lamborghini that you have to buy here and they have to spend to buy one here in Singapore, why don't we contribute that to a good cause, or, you know, make the world better? I mean, you driving a Lamborghini is not making the world better. And I think that's something that for myself has been a bit of a struggle, because, like, the work that we do is very selfish, right? Like, we're not changing the world. We're taking money from big corporations to do work, and that's, you know, impacting what they're doing, but it's not changing the lives of people. And so we've started to do a little bit more work at the UN and UNICEF and some other platforms to do consulting work for them around things that we can help on. So, like, we're just kicking off a project with one of the agencies looking at cryptocurrency for humanitarian cash transfers. So, like, if you think historically in South Sudan, nobody's going to have, well, not many people are going to have a smartphone or understand digital currency, but all of a sudden we have this scenario in the Ukraine where you have a highly digital population that is able to use smartphones, and that used to be a center of cryptocurrency development, right? So all of a sudden these things kind of become feasible, and it's a way of giving back. I mean, going to the book that I'm writing for my kid, like I'd like him to be a doctor, but not because of the money, but because you can have a dramatic impact on people and lives. And even better if you can become a researcher in the medical field, because then you can solve things like diabetes or work towards solving cancer issues, and these things are the impactful things that I think we kind of lose track with, because you're looking for that next dopamine hit in terms of promotion, and but even the CEO of HSBC, there's always going to be another CEO. There's always going to be somebody that's richer than you. There's always somebody that has the extra Lamborghini, right? Like it's a never-ending struggle. So where can you best direct your time? It's probably to what can I do to make an impact, right? Because the most of us monkeys are going to be footnotes in history, with the exception of the prime ministers, the presidents, or the terrorists, or the, so what can you do to actually leave a mark in this beyond, I mean, kids are a mark, and, hopefully you tell them to raise well, but I mean, we're a world of, whatever it is, 7 or 8 billion people right now. Like the original idea of procreation as humans is kind of passé, because we don't need more people, right? We need to make what we have better. And so that thinking about how you can leave a lasting mark and really make a difference in people's lives is really important. Not saying I'm there yet, but
of course, but I think what's amazing with that though is that I think everyone has the same, not necessarily 180, but it comes after a while, and I think it comes, when you do get a good, position financially, because you can start caring about other things. Of course, it's Maslow hierarchy needs. You're taking care of your initial stuff first and making sure you have food over your head, whatnot. But it's like you spend your 30s. Well, I spent my 20s and up to my 30s trying to get better at things, trying to acquire skills, trying to get into good positions with a career or a business. And then as time goes on, you realize that. You don't realize, that it's coming, but you get to the point where you're like, okay, now I want to redirect my time and do things that are more interesting. And that's even with my latest thing that I've launched, which is Podcast University. It's for younger people who want to start a podcast. It's being able to bring them through that actual journey, because I've just had so much enjoyment from it, meeting people like yourself, and I've just learned so much. And it's been like my own literal education. So it's kind of to that point is like, how can you actually just help other people to do things that are going to help them as well, And education is a good thing. Any sort of donations is a good thing as well. But it's cool to see you're doing stuff with UNICEF. That's going to be an awesome project, especially in the crypto sense.
Yeah. And it's nice to be able to see some of the application of this and the impact it could potentially have.
How's it going to work? So that's
what we got to figure out. That's what we're.
So I want to actually ask you about crypto. So for our last, we can wrap up on that as well. We have a couple of about 20 minutes, whatever. So you were super early in crypto, like you were like proper, early days in the crypto space.
Yeah, I mean, I was relatively early, but there were people obviously that were earlier than me.
True, but so you wrote your book 2014, Chomping at the Bitcoin: The Past, the Present, the Future. Okay, so that's an interesting title, considering in 2014 there was already so much of a past, but by 2022 there's been even way more happening in that period.
Yeah.
Why? What was your perspective for starting a book in the first place?
It was. I mean, I approach things as like life is an experience, and so everything you can do. So being an entrepreneur, when I left Intel in 2006, 2007, like I had money in the bank. I didn't have any responsibilities in terms of, a wife, kids, anything like that. So I kind of painted myself into a corner and said, you must become an entrepreneur because this is something you wanted to do. And this is your best shot of doing it, right? This is the time where, you don't have to worry about these other things. And so I did that. And somebody came along to me at one point because we had been following crypto for a while and started getting like a little bit of coverage, because at the time there weren't a lot of people that were covering crypto in China from an objective perspective, not entirely different than today, right? Like we were talking about realistic views on what's happening in the financial industry. There's not many people that have unbiased views or somewhat objective views about what's happening. And so I had built up a bit of a name for myself at that time anyways around, things have moved way beyond me now, but at that time as an objective view of what's happening. So we were getting quotes in various publications and event talks and everything else. And then somebody said, oh, you should write a book on Bitcoin. And so, it was totally opportunistic. I emailed somebody from Penguin that was a connection of a connection. And then within probably 2 months, I had a book contract, and it wasn't particularly amazing. I I say the joke that one of the OGs in crypto, who at the time was working for one of the Chinese exchanges and getting paid completely in crypto, and he believed in it. So he's done very well off of it. We did a book event in Beijing at one of the Scandinavian ambassadors' houses, and he offered to buy the book in Bitcoin. Because he would only buy it in Bitcoin, actually, and I didn't have a Bitcoin wallet on my phone at that point, and I had to like exchange renminbi for it. And I always make the joke that, which is true, that I probably would have made more money had I taken that in Bitcoin than I've made on the royalties of the book as a whole. Because I mean, writing a book for most people is not a profitable enterprise, right? But it's great for branding, and it's the third party validation. So it's really just the opportunity, and the idea at the time was to really just tell the story, because China was such a big part of the story at that time of what was happening in the cryptocurrency space. And there are some amazing characters. It was really a freewheeling time in China, and seeing everything that happened. I met some of the OGs of, you go out and play poker or have dinner or whatever else with some of these guys that are now, running some of the largest organizations in the space. So it's been amazing. I mean, a lot of them really nice guys, and super, super happy for them that they've come this far. And it's amazing to see the impact that they've had in this space as well.
It's crazy because they're all just kind of ordinary guys that got into it because they're right place, right time. Well, took the chance as well. Yeah,
it's kind of the screw loose thing with Ned, right? Like, Changpeng from Binance most famously sold his house in Shanghai for Bitcoin, and his wife at the time was super pissed off about it. But I think she's probably okay with the decision right now, like to have done that. But there's certain people, like the friend that bought the book or wanted to buy the book for Bitcoin, is like, he believed in it so much that he was taking his entire salary in Bitcoin. Now he's young and impressionable. He was very young at the time, but it's amazing to see how that's happened. Now, how this all works out, like what's the use case behind all of these, still I think is up in the air. But in terms of like obviously financially and impact that some of these guys have had has been incredible.
What's been your perspective? So in total, let's just look at Bitcoin. So, writing a book on it, seeing the development of it, where do you see the value in it, or do you see value in it?
And value is a really interesting thing. And that was one of the lessons from writing the book, is really kind of taking a step back and thinking about what is value, right? So 20,000 years ago, value was a large rock that was sitting in your backyard. The Yap Islands, right, that had stones, was an indication of value, and it was shells, and then it was Chinese coins and all of this. At the end of the day, if I had $1,000 bill on the table, like, and I was holding it, and I was holding 10 of them, I'd probably be a little bit nervous, right? But it's kind of ridiculous when you think about it, because it's just 10 pieces of paper. But there's a collective fiction, and Sapiens is a great book around this, but the collective fiction that this has value. And it does, because, I can take that down and I can exchange it for Singapore dollars, and I can buy a durian or whatever downstairs. But that what is value is a really interesting question. That was a big lesson for me. So I think, with everything that's happening, and kind of the culmination of our entire conversation is like, we have CBDCs coming down the line. We have like increased government regulation coming down the line. There is a need for some kind of third party store of value. And traditionally, that's been gold. Certain markets like diamonds, I mean, that's obviously artificially manipulated and all of this, but there is a need for something else kind of to be a store of value for people, because it is very uncertain. So I think there is that digital gold narrative is pretty good. I think everything around payments has been a little bit debunked, at least with Bitcoin, because it's not.
With the Lightning Network.
Some of those applications as well, but that's been around for a while, and we really haven't seen the traction. Again, going back, it's cheap, right? I can use Revolut to move money around the world. When we bought a house here earlier this year, and I had to move a chunk of money, and the best way to do it was Revolut. So it took me 10 days to get it onto Revolut in the US, because I had to use, in order to avoid the fees, I had to move it ACH from one bank to another bank to Revolut. So it took 10 days to get on the platform, and it took a couple of days to get here in Singapore dollars. But it was super cheap if you're a subscriber, not to plug Revolut. This isn't supposed to be a sales pitch, but here it goes.
I work there. It's all right.
Yeah. There's a logo, I'm sure, on the final version that's going to show up in the footnotes on this. But I mean, when you're a member, you don't pay fees, right? And then it makes it, I'm a huge fan of TransferWise, and we've used Wise for years for a corporate bank, and I wanted to use that personally. But then you see like the sum of money, it was like $500 in fees or something you'd be paying, and you look at Revolut and okay, I can subscribe for a year for $100 and get it for free. Like it's kind of a good value proposition. So like I think the payments value proposition on some of these cryptocurrencies, at least at this point, until people are like storing it, maybe for you or I, we might have a Bitcoin wallet and yeah, fine, okay, send me Bitcoin. Maybe 10 years down the line, my mother will have Bitcoin in one of her wallets stored somehow that she'd be using on a regular basis. But until we get to that point, I don't think that's there. But I think, at the end of the day, whether you believe in all of these things like Web3, Metaverse, Ethereum, and all the DApps that are put on top of that, and everything DeFi and everything else, it makes us think, and it makes us kind of review what we're doing and create innovation around that, which I think is only a good thing.
Have you read the Bitcoin Standard? You've read it?
I read some of it. Yeah.
So you understand like soft money versus hard money theory. Yeah. I think when you understand that really changes your perspective on currency and the financial system. Yeah. Like, of course, like the Bitcoin Standard, and he's also wrote the Fiat Standard. Safedine Amus, is his name? Yeah. So basically the concept, for anyone who doesn't know, so soft money is anything that can be manipulated. So seashells previously, or was it famously before? It was like rocks, as you mentioned, when they were trying when they were mined from the mountains. Essentially, what would happen is people would just kill the supply, add in way more in the supply, and it devalues the currency. I think when you understand that really, and you look at some examples that have happened with gold, taking the UK off the gold standard, when you look at other currencies, it really does give you a good insight into why Bitcoin, especially just because Bitcoin is in limited supply, has that value prop. And to me, that's why I would be a big proponent of it, just for that reason. That's the main reason. It's not the exchange, it's not the transfer, it's not the Lightning Network, it's that proponent, because at the end of the day, regardless of the fluctuations, no one can come in and intervene with it. Of course, there could be some software interruption at some point or whatever like that. There is a risk of that. But understanding that concept, that to me is like the whole thing. It's the whole idea behind it.
Yeah. And I think, again, going back, the past 70 years, we've lived in a time of relative geopolitical peace and economic growth with a couple of hiccups here and there. But, we've never experienced a Great Depression or, a world war where these things would matter much more. Mm-hmm. So I think it's very easy for people to poo-poo that idea because, we live in a relatively, okay, costs are going up here in Singapore, but we have a house, we're able to afford things, transportation is cheap and everything else. But you kind of forget about that things could go to shit pretty quickly or be in a scenario like that.
It's already, some things have already happened as well though, with other currencies. Of course, there are, emerging markets like Venezuela, Sri Lanka, a few other currencies which have gone completely to shit. But it's like that whole concept of like fractional reserve banking and having USD as like the reserve currency, like that premise, especially that screwed over Sri Lanka big time because their exports were done in USD and they had no local currency then as a result, and then they just completely imploded. So that's kind of like how it's like they're leveraging different currencies, even though there hasn't been an economic meltdown, and as a result we've still seen large scale depreciation on some currencies.
Yeah.
So it's a risk, it's like an overall risk, and that's why that's the main kind of idea why I think that Bitcoin does have that value of a store of value over time.
For sure.
Yeah. So I'd like to say a massive thank you. I really appreciate it. Where can people find all your stuff, like all your content and your business?
Kapronasia. So Kapron Asia.com.
Nice
it'll be in the show notes. I'm sure that you put it in there. I'm on Twitter at Zennon Kapron, I believe, and LinkedIn and all of this.
Awesome.
Can I just say this is probably the driest Irish podcast. I mean, I've done dozens of Irish podcasts. And it's the first one that there's no alcohol. Actually,
That's a difference. Yeah. It's middle of the day. It's like 11 o'clock in the morning.
Since when does that matter?
Yeah, that's true. We'll do another one, so we'll bring in a load of drink for it, and we'll make it completely different. I appreciate it, man.
Cheers, Darren.
Thank you so much. Appreciate it.
Yeah.
And let's do more sessions in the future.
Definitely. Thanks for having me.
Thanks, man.